Good afternoon. I hope you're enjoying the event so far. As the previous slide said, my name is Tim Corfield. I'm Managing Director of Griffin King. I'm a Chartered Accountant, Insolvency Practitioner and a law graduate. After qualifying, I've spent around 20 years advising business owners as to how to run profitable businesses. In more recent years, I've specialised in rescue and recovery and debt advice. Griffin King is specialists in all aspects of business rescue and recovery, including personal and corporate insolvency. Nothing else. We don't have an accounts department, we don't have a tax department, we don't have an audit department, we certainly don't do loans. We get introduced to our clients at the most difficult stage of their lives. Our clients tell us that we show empathy, compassion and consideration, and above all professionalism to help guide them through a very difficult period. But don't take my word for that. Have a look at our website and see the testimonials from our clients yourselves. And here's a couple of recent ones. And that's a testimonial recently from Michael and from Nigel. Okay, so why are we here today? Most of you either advise business owners or individuals in one capacity or another, or are in business yourself. This talk will help give you a flavour of what we do and how we can help you to help your clients, like we did with Michael and Nigel. So that brings me to today's talk. And this is a recent case study about how I and the staff at Griffin King went the extra mile to help Graham resolve his personal debt issues with an individual voluntary arrangement. That's an IVA. I'm sure you've all heard about IVAs, and this story explains how the whole process works in a bit more detail. And Graham's case was made much more complicated by a particularly upset creditor, and we'll look at that aspect of the story in the second part of the talk. And the whole talk will take about 20 minutes. So we'll look at how the IVA process works in some detail, and this is what we'll look at. How it can benefit a debtor, and the court procedure necessary, and how court protection can be obtained for a debtor against any action taken by a creditor, and what happens in a creditor's meeting, how a creditor can challenge an IVA, and most importantly, how the staff at Griffin King went the extra mile for Graham. So let's have a look at how this IVA worked for Graham. Like many debtors, Graham didn't exactly help himself. A bankruptcy petition had been issued for outstanding school fees. That's for his kids, of course, not Graham. And that was due to be heard on the 22nd of March, and he contacted us on the 19th. Graham had been trying to negotiate matters himself without achieving much, and he's now panicking. He told us about his heart condition and how all this stress didn't help. I'm not surprised. He eventually spoke to his accountant, who told him to call me, so I cleared my desk and saw him that afternoon. And we needed to quickly assess Graham's position and agree with him what was the best course of action. So, what were Graham's circumstances? Well, believe it or not, he was actually a business consultant. He was insolvent. He couldn't pay his debts as they fell due. He had a history of business failures due to lots of unforeseen circumstances. Of course, next time it would be different with his new business partner. He didn't want to be made bankrupt. He had an interest in 3 properties, the first of which was his matrimonial property, which was about to be repossessed, and this had negative equity, which was around £100,000, and that would crystallise as an unsecured debt through the repossession procedure. The second property was occupied by his parents, worth around £200,000, with secured lending of around £150,000, so that's equity of around £50,000. And then thirdly, there was a Spanish property worth about £150,000, with secured lending of around £80,000. So again, equity of about £70,000. I like these sort of maths, they're very easy for me. In addition to the repossession debt, there was over £300,000 worth of unsecured liabilities. These had mostly arisen from various guarantees and loans to failed businesses, business ventures, and of course there was tax and not forgetting the school fees. The business budget showed he could afford a monthly contribution of £1,000. So based on this information, our recommendation to Graham was to put proposals to creditors by way of an IVA. So what were the advantages of an IVA? He could still be a director of his trading company, which could continue and provide him with a living. An IVA wouldn't be advertised, as would a bankruptcy order. An IVA is actually a much more private arrangement. Under a bankruptcy, the equity in the two properties would need to be realised. An IVA is much more flexible, and creditors can often agree that the debtor retains some or all of the equity in a property, usually linked to future monthly contributions from earnings that wouldn't otherwise be available in a bankruptcy. So time was of the essence. There was a bankruptcy hearing in 3 days, and bailiffs had been instructed, so no pressure. How do we go about getting court protection that would freeze any action being taken by creditors? The only sure way to put creditor action on hold was to file at court straight away for an interim order. So that's what we did. And this meant the full detailed report, that is, the proposals, needed to be filed in court the next day. Fortunately for Graham, that evening, Cheryl, my personal insolvency manager, was planning a quiet night in watching TV. Law and Order, a favourite programme. But she didn't mind in the slightest working until the early hours of the morning to get the proposal in a fit state to court, for filing at court. What does a proposal need to include about a debtor? The reasons why creditors should agree to the proposals. For example, a better offer would be available to creditors compared to bankruptcy. Background to the problems. Of course, the assets, the details and the values, and how it's proposed they're to be dealt with. They could even be excluded. And this would include any pension or other savings plan. Liabilities, of course, on all the debts of the debtor. A monthly household income and expenditure. And details of any contributions from future income. And if he's self-employed, if the debtor's self-employed, he'd need a business plan to be included. The duration of the IVA, typically it's 5 years, and proposed dates of dividend payments and estimated return to creditors. So the following day, the proposal was filed in the Birmingham County Court, and Cheryl attended the bankruptcy hearing a couple of days later to make sure everything went smoothly, which it did. And the bankruptcy hearing was adjourned until after the creditors' meeting could take place. So what would have happened if we hadn't got the interim order? It's most likely that a bankruptcy order would have been made against Graham at the hearing. But now Graham had the court protection, not only from the petitioning creditor, but also any legal action that any of his creditors, other creditors might take, including any bailiff action. So the immediate pressure was off. So far, so good. The next part of the process was to complete and file the nominees' report. What's the nominees' report? This is where the IP, that's the insolvency practitioner, has to formally recommend to the court that a meeting of creditors is to be called and has to express his opinion on the following issues. That's the right slide. Is the proposal likely to succeed? Are the assets and liabilities reasonably stated? Is there any unfairness between creditors? Should a meeting of creditors take place? And there should be a direct comparison of the anticipated return in the IVA compared to bankruptcy. So we filed the nominees' report and we recommended that a meeting of creditors should take place. So what happens at the creditors' meeting? there has to be at least 14 days between giving notice to the creditors of the meeting and the date of the meeting. So the meeting took place on the 2nd of May, which was around 5 weeks from our original meeting with Graham. And at the meeting of creditors, there needs to be at least 75% of creditors in value voting in person or proxy to approve the IVA. In practice, for an IVA, very few creditors actually attend a meeting in person. They simply appoint the chairman of the meeting as their proxy to vote as they direct for the value recorded on their proof of debt. The creditors also have the right to put forward modifications, and these have to be agreed by the debtor and also need a 75% majority. In Graham's case, the meeting of creditors approved the proposals 100% without any modifications. Graham was delighted. The pressure was off and he could concentrate on his business development. So, job done, or so we thought. And now we turn to the second part of the story and what happens if a creditor hasn't received notice of the creditors' meeting. So on the 13th of June, which was around 6 weeks after the approval of the IVA, we got a letter from an unknown creditor who was the administrator of a former company of Graham. And the administrator advised us that Graham had signed a personal guarantee in respect of unpaid administrators' fees. And this debt hadn't been included in Graham's proposal, and this was the first we'd heard of it. So we took it up with Graham straight away. And we found out about the PG, the personal guarantee, and Graham maintained he'd forgotten about the PG. Yeah, would you believe it? 3 separate PGs had been signed by the 3 former directors. He didn't have a copy of the PG. He was unsure whether either his co-directors had paid anything further. He was unsure what realisations had been recovered by the administrator, which may have extinguished or reduced the liability. He was unsure of the legality of the PG. It was handwritten and vague. And the maximum liability arising on the debt appeared to be for $25,000. Okay, so back to the question, what happens if a creditor hasn't received notice? The administrator was very angry. He thought he should have received notice and he objected to being admitted into the IVA. So the administrator, Mr. Angry, instructed solicitors. And I'd have to say, I've never dealt with any professional who was so aggressive and rude as this solicitor. She obviously wanted to impress a very angry client, and I'll refer to her as Miss Nasty, or Ms. Nasty, as you probably prefer. And here's a picture of Mr. Angry and Ms. Nasty to give you a better idea as to who we're dealing with. She's rather good looking, isn't she? Okay, Ms. Nasty maintained that this omission was material and deliberate. As she said, Graham knew that Mr. Angry would oppose any IVA proposal and that the IVA unfairly prejudiced Mr. Angry's interests. Under insolvency rules, all creditors are bound by the approved IVA, whether or not they receive notice of it, unless proven to be a deliberate omission. So like it or not, Mr. Angry was actually bound by the terms of the IVA, subject to my adjudication of the validity of his alleged PG. Under Section 262 of the Insolvency Act, a creditor who received no notice of the IVA meeting has a right to challenge the decision of the meeting within 28 days of becoming aware of the IVA. So we received an ultimatum from Ms. Nasty that an application would be made to court to challenge the IVA unless we terminated the IVA and petitioned immediately for the bankruptcy of Graham. It really wasn't as simple as just filing a petition against Graham. In some ways, this would have been a very easy option. But the majority of creditors had voted to approve the IVA, and we had a responsibility to referee the IVA contract between Graham's creditors and Graham. And at this stage, Mr. Angry had no clear grounds for any challenge. He'd need to prove his debt and the IVA prejudiced his interests. There was a week or so of very intensive emails from Miss Nasty. By this time, I'd actually gone away on holiday, touring in India. And just in case you're wondering, booked months before I'd even met Graham. So I left this case in the capable hands of Emma, my compliance manager, and Cheryl at my office. And just to give you a flavour of these emails, I'll read a couple of them out. So at 1:02 on the 25th of June, there's an email to Emma. I attach a further copy of my unanswered letter dated 23rd of June. I've also telephoned your office this morning and asked that you or someone else contacts me in Mr. Corfield's absence. Well, a message had been left for Ms. Nasty that morning following a call that the letter she was talking about had been responded to, and Emma was out of the office that day and would call back in the morning. That seems reasonable enough to me. But the email went on to say, please provide a substantive response to the unanswered letter by 4 p.m. today. Your actions are wholly unacceptable. If you fail to do so, my client reserves his position in relation to reporting the conduct of your firm to your regulatory body. And bear in mind, this was a letter that was 2 days old and had been responded to. So we had another email later that day, 4:03. No doubt after she got our message saying the letter had been responded to. Please ask your office to provide, by return of email, the letters dated 24th and 25th of June 2013. Needless to say, they have not been received in this office. And this is the bit I really like. I note that Mr. Corfield has been reading his emails, but has chosen not to respond to mine. What? As you can imagine, these emails had me spluttering over my biryani. I'd have been impressed by anyone opening emails in the back of an Indian taxi racing across Rajasthan, let alone juggling with enclosures on my iPhone. What did you think? Did you think I'd taken the files with me? So we made a formal complaint to the senior partner, and things did get a little better after that. So coming back to the question, what happens if a creditor hasn't received notice? Clearly, until we could be satisfied that there was actually a debt, there were no implications for the IVA under Section 262. It was a creditor's right to make application under Section 262 if they wished, but in all likelihood, any court would just order a further meeting of creditors to take place, as this is ultimately a decision for the creditors and not the court. So correspondence continued, and eventually a Section 262 application was received from Ms. Nasty and a hearing listed. And by this time, we'd instructed solicitors ourselves to particularly consider whether or not this was a valid debt. And this hinged on a consent order which hadn't readily been disclosed by Ms. Nasty, that was lodged at court for a hearing which had taken place some years ago. But because of this consent order, on balance, we felt we had to accept the debt. And because this claim had a material effect on the dividend to creditors, we had no alternative but to call a further meeting of creditors so that the creditors could consider whether they were still prepared to agree to the proposals put forward by Graham. But of course this time, Mr. Angry would have a vote. The court hearing scheduled to hear the Section 262 application was vacated by consent and the date for the creditors' meeting set. We knew that Graham was going to have a difficult time persuading his creditors to accept again the terms of the IVA. And Mr. Angry knew who the creditors were, and no doubt was going to make very strong representations as to why he felt the creditors should reject any proposal put forward. We strongly recommended to Graham that if he wanted the proposal to be approved, he'd have to revisit his proposals and sharpen his pencil. So Graham put forward the following amendments. He increased by 2 years to 7 years from the original 5-year term, the period that he was actually paying into the proposal, into the arrangement. And he also offered his interest in some shares and also a pension lump sum, which had previously been excluded and agreed to by the creditors. So we went through the revised proposals carefully with Graham. We then sent them to creditors, disclosing the original omissions and the new terms proposed by Graham and the revised dividends. Needless to say, Mr. Angry voted against the proposals and made his feelings known to other creditors. And during all this time, Emma kept in touch with the major creditors and kept them informed of the situation. The creditors weren't particularly impressed by what they could see of the unprofessional attitude of Mr. Angry. He even offered to buy the debt off various creditors so that he could increase his voting at the creditors' meeting. And after many long telephone conversations, both the major creditors and the petitioning creditor agreed to support the proposals, particularly since they'd been revised by Graham to increase the dividends. So at the creditors' meeting, despite the opposition of Mr. Angry, the proposals were approved and there was nothing more Mr. Angry could do. And once again, Graham was delighted and tells me now he's trading successfully with his new partner. And what would have happened if Mr. Angry and Ms. Nasty had got their way and the IVA wasn't approved? Well, certainly Graham would have been made bankrupt. It's likely that bankruptcy would have had a big impact on Graham's earning potential. He certainly wouldn't have proceeded in the way that he has done. And Graham would have had to realise the equity in the two properties. And I'm sure Mr. Angry and Ms. Nasty would have tried to get involved with the administration of the insolvency, and I'm sure they'd have made Graham's life hell. Okay, so to summarise what we've covered in today's talk, we've looked at how an individual voluntary arrangement works, what it contains, and how it can benefit a debtor and a creditor, the court procedure, how court protection is achieved, what happens at the creditors' meeting, and what happens if a creditor wants to object to an IVA. And finally, we've looked at how the team at Griffin King will always go the extra mile to make sure our clients get the best possible service and are supported through what, for many of them, will be the most difficult time of their lives. And this is what Graham wrote about us. He said, the team at Griffin King, led by Tim Corfield, has been outstanding. I've been particularly impressed by their strong technical knowledge, that must have been Emma and Cheryl, and the support that they afford to customers such as me. I'm grateful for their support. So in conclusion, what do I want you to do? Well, if you're aware that any of your clients or business contacts have issues like we've looked at today, or you think we might be able to help, please speak to me or one of my colleagues. We're always pleased to have a chat or a meeting without charge to explore options, and I'm sure we can help. What we're trying to avoid is a formal insolvency situation, but the next best thing is a structured, planned insolvency process of which the director or the individual can retain a good element of control. And just before I conclude, I'll ask my colleagues at Griffin King to briefly stand and make themselves known. Thank you, everybody. Thank you, Richard, James, Mike, Seema, Carrie, Emma, Cheryl at the back there. Thank you. Thank you, everybody. And thank you for listening. Thank you.
Thanks for that, Tim. Very insightful presentation there. I'd like to hand over now to Jim Davis, who's the Head of Sales for Bibby Financial Services in Birmingham, for a talk on invoice finance. Thank you.
Firstly, thanks a lot, Guy, for introducing me, and thank you to Janet and Tim for inviting Bibby to be the sponsors to this event today. I am going to talk about Bibby, obviously, but I'm also going to talk about the difficulty that SMEs have in access to funding and raising funds for the future growth of their businesses. So a little bit about Bibby first. Bibby are the largest independent invoice finance provider in the UK. We've been in business as a financial services business for the last 27 years, and we're part of a 200-year-old group of companies, still family-owned by the Bibby family, and the group specialise in financial services, but logistics, domestic and worldwide, and ship management. I hope I pronounced my P correctly then. As I said, we've been in business a long time. We've got about 4,000 clients in the UK and about 6,000 worldwide just in financial services. So that's a really brief outline of who Bibby are. But what I really came to talk to you about access to funding by SMEs. Now, why are the banks not supporting SMEs? And why are we seeing a reduction in net lending from the banks into this sector? And I think we have to look at the way banks work and the way banks raise their capital to lend out into the marketplace. Banks raise capital three ways: from profits, from deposits, and from purchasing from the money markets. Now, as we all know, over the last 5 years, the banks, unfortunately, haven't been making any profits. The rate of return on the deposits that we as current account holders and businesses deposit places, the rate of return is very low, and therefore investors are taking those funds and placing them elsewhere. And because of the UK banking industry's poor rating, therefore the money markets are very expensive to them. So what happens when you don't have as much capital as you had before? You therefore lend it to your least riskiest proposition. And that's really one of the reasons. The other reason is obviously the regulators and Basel III coming in, and therefore the banks have to hold more capital for every lend that they make. The riskier lend, the higher amount of capital. So in one hand, they haven't got as much capital as they had, and in the other, they have to hold more against each lend that they make. And therefore, the amount of capital available to the SMEs and the more riskier end of the market isn't as great as it was pre-2008. So a real whistle-stop tour about how that industry works. What it's meant is, over time, bank lending within the SME market is reduced, but the alternative market, where Bibby sit, has kept our borrowing levels at a reasonable pace, ahead of banking lending within the SME market. And we're quite proud of that, and we're quite proud of continuing to support SMEs. This next slide is really just some stats and some percentages about applications in overdrafts and what level of those overdrafts are accepted. But the more important thing about this is the confidence, really, that banks would agree to SME funding, and it's falling. And the problem I have with that is actually confidence within SMEs, owner-manager businesses, we find at the moment is increasing. Owner-managers are more confident about their future. And the problem that we have as a lending industry is that we need to get funds into that marketplace to continue that confidence. If we dampen it, then confidence will fall and they won't be coming to us to borrow money, and they won't be going to the banks to borrow money. So it's absolutely necessary that we get those funds out to SMEs to keep that confidence going, and that will drive our economy forward. So where does Bibby fit within this? Well, since 2009, we've been growing our book. We've currently got about £350 million out to UK SMEs. And when I talk about SMEs, I need to say these are small and micro businesses. The definition of a micro is less than 5 employees, small being 50 and SME up to 250. So generally, our lending sits in the micro and small end, although recently we've increased what we class as our corporate lending, which is businesses that are turning over 5 million plus. So our lending has increased during the times where we've seen overall lending decline, and we've got about £350 million out the door. More locally, we're supporting 400 businesses within the West Midlands, and we've got £44 million out the door. About 12% nationally of the funds that we've got out sit within the West Midlands. We're absolutely committed to supporting SMEs within the West Midlands. And how do we do it? Well, I'm not going to go through the number of products that we have. I'm not going to spend too much time on each individual product, but I will a little bit later on come back to 2 products that I hope you'll be interested in. Effectively, we're invoice finance providers, so factoring and invoice discounting is exactly what we do. And I'm sure the majority of people in this room know a fair amount about it. Who do we lend to? Well, as I've said, we lend to SMEs, sole traders, limited companies, LLPs. We do get involved in mergers and acquisitions through MBOs and MBIs, and we do support where we can, CVAs and Phoenix businesses. We're quite happy to fund start-up businesses. And one of the products which was mentioned on the previous slide is a product specifically, we've designed specifically for start-up businesses. It's a product that we call Forward Finance. If any of you want to discuss any of the products, I'll introduce you to the team a little bit later on. Sample industries, we cover pretty much all of the sectors that you'd expect us to. What I like to say to people when they're talking about invoice finance is simple product or service, you'll get a greater level of funding. The more complicated the product or the service, the lower level of funding you'll get. However, there is still funding available, and that's really important because in other areas, the funding may not be available. So speak to the people we have here. Right, 2 products I'm going to concentrate on. It's not a new product. We've been providing export finance. I'm just looking at Janice to confirm how long we've been doing our export finance product. 10 years? 10 years, okay. So we've been providing export factoring to the UK marketplace for a good 10 years. It's providing factoring and invoice discounting facilities for businesses that are exporting, whether they're exporting as well as selling domestically or whether they're just exporting abroad. Mark recently put a deal together through the export team where we funded a business that was supplying second-hand vehicles to a company in Malaysia, single debtor, 100% export, and we obviously got some bad debt protection and we were able to put a funding package for that business together. Really good example of what we can do in that export market. The proposition, a couple of points to highlight within this proposition which I think are really interesting. Firstly, we've got a team of multilingual credit controllers. So if you've got a business and you're supplying your product to Slovakia, we will chase that debt in Slovakian on your behalf, whether that be confidentially or whether that be disclosed. And secondly, we have a number of bank accounts around Europe and further afield. So the debtors have the ability to pay in currency locally rather than sending funds to the UK, which immediately puts our customers in a better position than their competition, because their competition are having to ask their debtors to change funds in terms of exchange rate or the cost of a bank transferring funds from Slovakia to the UK. So we're able to help in those 2 areas and many others. The next product I just want to concentrate on briefly is a product that we've recently developed called Purchase Funding. What we do in this regard is that it's rather like a trade finance facility, but as a lot of you will know with trade finance facilities, trade finances only work against a purchase order. So you go to market, you've got a purchase order from one of your debtors, and a trade finance provider will secure you some funds based on the security of that purchase order. But what about the businesses who buy stock in for many different debtors, for many different customers? So we've developed a product where we allow our clients to buy stock and sell stock, not against a purchase order. And the way we do it is we take out an insurance policy against our client, our customer, and we can offset the risk that way. We can put up anything up to 5 million out the door in respect to purchase funding, but it is always dependent on the quality of our customer rather than the debtor. Okay, it's a 90-day purchase facility. It's not necessarily linked to an invoice finance facility. It can stand to one side as additional funding, even if one of your customers or clients has funding with another bank as well. So it can sit alongside. So why work with us? Okay. The comments that are up there. Speedy response is probably a powerful one. We've got our Managing Director, Sharon Wiltshire, in the room. And the proposals that us as business development guys put together generally get looked at by Sharon. And Sharon will be out visiting our prospects with us and our clients on an ongoing basis. So it's a very easy flow of information between business development and underwriter. We're not having to send files into an ivory tower for people to respond negatively about. I'm going to leave you now with just some testimonials. I'd just like you to think about one thing, and I'll ask you one thing. When people talk to you about funding, don't just immediately think the banks. The banks do provide a great service, and I'm not here to bash them, but what I would like to ask you to do is think about the alternative areas of funding that are available, and therefore think about Bibby. Thank you very much. It's me done.
Hello, good afternoon. Well done. Nice presentation. I'm Councillor Christo. I'm responsible for the Cabinet Member for Finance in Walsall Council. And I'm interested in, obviously, I'm a businessman, and I was very interested to see your funding of finance for startups. I mean, clearly, we're very keen in Walsall to encourage businesses to grow. That's where the jobs are going to come from, the wealth's going to come from for the town. And startups are something that I'm very keen to see happen. So if you can explain more about that, please. Thank you.
Yeah, is my mic still on? Yeah. We've been supporting startups for many, many years, and we've supported them in general invoice discounting or factoring facilities. The product that we've developed is still a factoring facility, so it still requires that customer to be selling their product or services on credit terms to their debtor. And therefore, that gives us an asset which we can leverage some debt on, provide funding on. What we've done is, if anybody is involved in invoice finance, they'll know that it's quite a complicated fee structure. Normally, there's service fees and then interest on the rate on the monies that you borrow, and there's various other fees along the way. So what we've done is we've just narrowed that fee base on the forward finance product. So a business person will come to us with a proposition. They will know what turnover they're expecting, and we will just provide them on a fixed fee basis. So, as a for instance, 3.75% of their sales value will be the cost of running that facility. All encompassing, so no interest costs, no separate service fee. It'll just be one fee, and therefore that individual can go off knowing, okay, I need to make 3.75% on top of my margin to be where I was before. So it's a very simple way of understanding the cost base of that facility. From a perspective of a lender, we've always supported startups. And I would suggest over the last, well, probably since 2008, when there's been a high redundancy rate and people have been getting a bit of funding behind them from that redundancy, we've seen a great number of small businesses set up and come to us for funding. We're very open to it. In terms of security, we have the book debt is our main security. We take a debenture over the business, and in most instances, we will take a personal guarantee from the individual, but it's an unsecured guarantee. And that's where it differentiates a little bit from the banking sector, who up to 25,000, they're likely to go unsecured. Greater than 25,000, they're going to have secured or some level of asset security to support that debt. Okay?
Sorry, my name's Cully from Bibby Financial Services. Question for Tim. What kind of fees are involved in a IVA, CVA? And also, how sympathetic have creditors been over the past few years?
Sorry, what was the first part of the question?
What kind of fees are involved in an IVA or CVA for the individuals or the companies concerned?
Okay, with an IVA, that's the individual voluntary arrangement, then the fees will vary, but typically for a nominee's fee, there might be £1,000 or £1,500. And to oversee the arrangement for, say, a 5-year period, typically they're capped by the creditors, so and that would be typically at 15% of all realisations. So if there's, say, £30,000 realised, that would be 15% of that would be £4,500 for the supervisor's fees. So that's typically what an IVA would cost through the duration of the whole IVA. So say about £5,000. With a CVA, that's a creditor's voluntary arrangement. Company voluntary arrangement. And they're more sort of varied. I mean, we would do a nominee's charge at from £2,500 to £5,000, and it depends on all the circumstances. And then, of course, the actual supervisor's charge could be £5,000, it could be £10,000. It could typically the revenue will agree to say maybe £2,500 a year, but they will look at things and they will typically cap fees again. So it's really what the creditors are prepared to put up with largely. But that gives you a flavour, does it, I hope, as to what the fees would be?
Yes, it does, yeah.
Okay.
And just secondly, was how sympathetic have creditors been over the past few years?
Reasonably sympathetic. I always think that if an IVA or a CVA is put forward and it's put forward sensibly, then the creditors will approve it. The revenue, again, will usually approve so long as the debtor has been compliant. That includes the debtor company as well. And in most cases, even the revenue will approve a CVA or an IVA so long as the debtor does agree that he'll get all his returns up to date. There are exceptions where the debtor has been particularly non-compliant and the revenue just say no, and I've seen that on a few instances. But in those circumstances, the debtor needs to be very non-compliant, quite honestly. So more often than not, creditors will agree to an IVA and a CVA, so long as it's sensibly put together.
Brian Aikman, FPC Mumby Bowder, Wolverhampton and Shrewsbury. Tim, a question for you really following on that last answer regarding the revenues attitude. I mean, historically with IVAs, they've been quite insistent on the adoption of terms to the proposals, some of which have seemed quite inflexible to the practitioner. Are you finding any flexibility in attitude from the Crown at the moment, particularly with the pressure that all government departments are under?
I think with every IVA, it's dependent upon all the circumstances. We find that by talking to them and negotiating and explaining the particular issues, then they are flexible. They do listen, and it's not easy. I must say, it's not easy, but. And I would actually applaud my staff for this. We do have some good people and some very persistent people in my office who do get some very good results. And it is a case of going back to them and explaining all the circumstances. I think often they'll just say no to a particular set of circumstances if there's something they don't like. But it's important that we go back and explain what are all the issues and why that particular issue that the revenue picked up on is not the most important thing, and like I say, that's so with dialogue, we do tend to get a good result, a good success rate. And it seems to be the non-compliance issue that really is the biggest stumbling block. If that is not if that isn't there, then the chances are we can get agreement with the revenue. Thanks.
John Stiliano, and the business is Actual People Development, and I'm sorry, one's for Tim as well. So you talked about Graham, and it was you had 3 days to act. How typical is that, where business owners generally come to you when it's too late, rather than when you can do something even more creative than an IVA for them?
At least with 3 days and 3 days to go before the hearing, you do have a chance of actually doing something. So at least there was 3 days to do something about it, and that is not untypical. I mean, more often than not, there isn't that urgency, but that is we could all, certainly in my office, we could account probably talk about 10 instances like that this year when we've had to get interim orders very quickly and things need to happen. But at least that does give us half a chance. When I had somebody phone me up the other day, and he was a director of a company, and this company had actually been wound up by the Inland Revenue about 2 weeks ago. And I did say, well, that's something we couldn't do a great deal about. And because it's quite important to actually get involved. If he'd have come to us with 2 days to go, we could have done something about that. But it's more difficult when an order has been made. Then it becomes a lot more difficult. And he was actually a guy down in London anyway, and I recommended that he see a local solicitor. But that is too late. That really is too late. So 3 days, yep, we can do something about it. Thanks, John.
Any more questions? No? Okay, well, both speakers and their teams will be around after if you'd rather do a one-to-one instead of asking a question to the floor. Okay, right, let's do the business card draw next.
Right, okay.
You've got the microphone.
Hello. Right, so the winner is Annette Dwyer. Thank you, Annette, well done. Well done, Annette. I'll come over there to give you a little peck on the cheek.
I'll get a photograph taken as well, have I?
Well done, Annette.
Thank you.
Okay. And the next one up is rummage, is Marco Di Vicentis. Did I say that properly? I hope I did. How about a reassuring hug? That's great. Okay. Well played, Marco. Well played, Marco. Okay. Well done. Oh, another one.
Yeah.
Yeah.
Last one.
Getting exciting. And it's Jeremy Etuff. Well done, Jared. Well done, Jed. Cheers, Jed. That's right.
This has got to be worth some money, Jed.
Well done, Jed. Okay.
It's my mum's birthday today.
Oh, brilliant. Great.
Yeah, so first of all, just tell me where we are today, what we've been doing, what the event's been about.
Right, we're at the Village Hotel just off of Junction 10 on the M6, which is an incredibly convenient location for us all to gather at. We're at a lunchtime seminar hosted by Griffin King, sponsored by Bibby Financial Services, and we've been talking about personal insolvency, and we've also been talking about corporate finance.
Right, okay. Just sum up perhaps the benefits of today's content for the delegates.
Yeah, it's a very balanced content. It's taken into account both sides of the spectrum in terms of the personal perspective, the individual voluntary arrangements and what that can do for us as individuals. And also there's put a little bit of context around why people like Graham, used in Tim's example, need to run their own businesses to earn a living. And the corporate side actually typifies some of the classic examples of difficulties that businesses like the one that Graham would be running to support his IVA find themselves in today, and how we can provide a solution for them.
Great, okay. And then finally, would you recommend an event like today, and then also B, just recommend Griffin and King on the whole?
Absolutely, yeah. I mean, the event today is great. As I say, the location's fantastic, nice and convenient to nip in, nip out, not too long. I think there's a good spread of delegates, there's a good number here, there's enough people to mix and mingle with. And yes, I would recommend Griffin and King.
Okay, so yeah, first of all, Chris, just tell us where we are today and what's been going on.
Well, I think it's been a wonderful event today. It's been an opportunity for people to hear how certain things work. I didn't know anything about the voluntary arrangements that Tim outlined. I thought that was very interesting. Plus, of course, Bibby & King are a significant company. And for me, as a cabinet member for finance and personnel in Walsall Council, it was good to hear about what Bibby are doing to help people with finance.
Okay, so talk to me just a little bit about the networking opportunities.
Well, as you know, as people will know, I'm a great networking person. I run Gone Fishing for Business, which is a networking group that's been going now for 6 years. Griffin King come along and have got a lot of benefit from coming, great supporter. Networking is very important. It's not just about getting an order from someone, it's about understanding what business is happening in business and listening to what other people are saying. It does help you, you know, if you understand what's going on out there, because your view might only be taken from listening to the media, and reading newspapers, and sometimes that's very skewed.
Great, okay, and then finally, just tell me whether or not you'd recommend this type of event, recommend Griffin & King in general.
Oh, of course. I'm a great believer, as I said, in networking events. Griffin & King make a significant contribution to helping people. That's the important thing. Networking works. Always remember, people do business with people, always have, always will.
So just tell me where we are and what everyone's been doing today.
Okay. Yeah, hi, we're at the Village Hotel Warsaw. We've just been to witness a seminar from Griffin & King and Bibby Financial Services.
Great, okay, and just tell me a little bit about the content, what benefits the delegates may have got, and not only from the content, but maybe the networking opportunities as well.
Occasions like this are always really useful to meet people that you might be able to do business with, to network with. It's nice to see some familiar faces as well as some new faces. But occasions like this are always useful to learn more about the companies who are presenting in terms of what they specialise in, what they're offering to people, and how we can be looking for opportunities for them and how they can help with our own network of contacts as well.
Wonderful. And then finally, would you, and if you would, tell me whether you'd recommend the event and also Griffin & King as a company?
I can highly recommend these events. They really are. They're good fun, they're enjoyable, and they're very informative. And yes, Griffin & King definitely got a very good reputation in the area for their services, so would definitely recommend them, certainly.
Yeah, first of all, just introduce yourself and tell me where you're from.
I'm Joanne Baldwin from Nicklin Chartered Accountants in Halzone.
Great, okay. And just tell us where we are and what's been taking place today.
We're at the Griffin & King presentation. It's been very interesting. Tim Corfield was particularly revealing about a personal case and how he'd helped a client. And then Bibby's also explained some of the new products that they've got regarding purchase financing and etc. and alternative methods of financing for businesses locally.
Right, okay. And perhaps tell me something that you personally got out of today.
It was just interesting, the particular case that Tim went through, the situation that the guy had got himself into, how late he'd left it, and how they went the extra mile to really help him and settle him down. But it was good.
Okay, and finally, just a recommendation. A, would you recommend it to colleagues, clients, and then so that's the event itself, and then also Griffin & King as a company?
Yeah, I think the event itself was very good. There was an excellent turnout, a wide range of other professionals to network with, and also the presentation was very clear, and it's obvious that Tim cares for his clients, and I'd be happy to recommend him.
Okay, Nick, just start by introducing yourself. Tell me what company you're from.
I'm Nick Waterhouse-Brown. I do tax consultancy at LDP Luckmans. Also got a tax consultancy company that pretty much most of my work comes from accountants when they get stuck in tax.
Great, okay. So yeah, just tell me about the event today. Tell me what took place, what the benefits of it.
There's about 100 odd people here from various professions. Very good gathering of people, and just nice people in a nice location and just wanting to do business together. So it's very useful to meet and just a natural event. So Tim, not in sales mode, just telling things as they are, which is great. So real life examples of people that he's helped in business, and exactly the same for Bibby Financial as well.
Right, okay. Just tell me a little bit about the actual content then today, what Tim and what Bibby went through and how that benefited you.
Well, real life examples are useful. So Tim gave an example of a person that got into financial difficulty. There was people on the other side trying to interfere, cause problems, how he resolved them, how he got a deal made, and how he just made sure his client was given an exceptional service to make sure that they didn't lose out and he could carry on with his life without a huge financial stain. So that was great. And Bibby was just giving examples of people that they can help in different kind of industries, that they are open for business and they're open to lend to people to do extra sales.